For Morningstar.com, I'm Jeremy Glazer. Both Starbucks and McDonald's posted outstanding quarters today. I'm here with analyst RJ Hottovy to discuss what's driving their results and what the future could hold. RJ, thanks for talking with me today.
Thanks for having me, Jeremy.
So starting with McDonald's, which reported this morning, they had another great quarter. What was driving their growth?
That was a number of factors, and really I think that the key takeaways here are twofold. First, that March sales in the U.S. took off. We had seen flattish sales in January and February and saw a nice rebound in March. And to me, that shows that a lot of things they've done on the menu are gaining traction, whether or not that's the introduction of Frappies and the soon-to-be launched smoothie products, some of the more premium products such as Angus burgers, and some of the simpler things they've done in terms of snack and portable products in terms of the Big Mac wrap. All these things are having a meaningful impact on driving traffic. Another thing that they've done very well is the introduction of the everyday breakfast value menu, which certainly played a role in driving traffic. We've seen a little bit of sacrifice at the average ticket level, but certainly, this has been a key driver of sales, and I think that that's going to help to drive operating margins going forward. The other factor, too, is just, the second factor really is just the operating margin line. To continue to put up 200 basis points of our operating margin improvement really was the key highlight for us. And a lot of that has to do with favorable commodity costs that will lap in the back half of the year. We won't see that favorability. But I expect the company to post some pretty, still some pretty impressive margin gains for the year just based on basic blocking and tackling at the G&A level. I think the company's well positioned for the rest of this year.
One of the concerns about McDonald's has been that with unemployment so high, people aren't eating out as much, they're staying at home. Is that something that you saw in the quarter, or does it seem that people are back in the restaurants? Yeah,
it's certainly a factor, and quick service restaurant sales are so tied to unemployment rates, and we did see some of that impact the quarter. I mean, traffic was back in March, but still not great, and I think the company will acknowledge that things won't be great until unemployment rates continue to fall. But that said, I think that they're offsetting that again with some of the value-oriented promotions that they have with breakfast and a number of other things on the menu. So that's their way of combating those numbers.
Getting back to, you were saying earlier, the launch of Frappies and smoothies could be a big boon for them. That seems to be elbowing into Starbucks territory more and more. How is Starbucks kind of dealing with that competitive threat, or are they really going after different customer sets?
Yeah, it's amazing. We've really seen a convergence of McDonald's and Starbucks over the past couple of years. McDonald's got into specialty coffee, and Starbucks fired back by introducing breakfast pairings. So really, we've seen a convergence of that, and that's how Starbucks is competing with that. They're going in breakfast pairings is one thing, where they have, coffee and a pastry for under $2.99. Whether it be, other lunch food products that they have at Starbucks, a number of ways to combat that, and even just as something as simple as, maybe lowering the prices on their most popular lattes and products, where, maybe raising the price on their most advanced or more complex drinks. That's how they're competing with that. But ultimately, end of the day, we feel like the coffee space is, large enough, it's growing, it's going to support both these players and probably a few more.
So we look at Starbucks quarter, they also had some pretty good numbers. That seems to be playing out there as well.
Yeah, I think what we're seeing here is that consumer spending in March and into April has been pretty broad-based. We still see strength in McDonald's, so that says the lower income consumer is starting to spend more. But again, it echoes what we've seen in retail, where the more affluent customer who would typically go to Starbucks is also more willing to spend. The big question is whether or not these trends are sustainable, and we probably will see some deceleration in the back half of the year, but at the same time, things look pretty good, especially with the cost cuttings that a lot of these companies have put in place. It bodes well for margins in the back half of the year.
Starbucks is now returning some capital to shareholders through a dividend. Is that an admission that kind of their explosive growth is over, and would you expect to see kind of more modest store openings over the...
Yeah, I think the period of double-digit growth is over probably in the U.S., but I think they've brought a pretty good runway of growth, especially in the international side of the business. And the consumer products side of the business, I think, is especially intriguing. The instant coffee launch, the Via product that the company's put on the market, has blown away expectations, done a lot better than I ever expected it to do. But it's a compelling product, and again, as people, kind of associate that with the popular Starbucks brand, I think that could be a potential, potentially large revenue stream, and potentially something that drives margins down the road as well.
From a valuation perspective, are either of these stocks attractive right now?
I think we're starting to see a little bit of overvalue in this space. Our fair value estimate on McDonald's is still $66. Stock is currently trading at about 71. So we think that's modestly ahead of our fair value estimate, and would probably wait for other pullbacks before really looking at that attractive name. Starbucks stock is currently at $25. Our fair value estimate is $20. So again, we start to think that valuations here are starting to get ahead of themselves. I mean, admittedly, things look great right now. We've had a great couple months, and probably that'll continue into the second quarter. But longer term, again, keeping in mind where margins can go, it's important to keep that long-term perspective and maybe recognize that things have gotten ahead of themselves a little bit.
So it could be some opportunities in the back half of the year.
I think so.
All right, RJ, thanks so much.
Thank you.
For Morningstar.com, I'm Jeremy Glazer.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.